Good afternoon, everybody. This is Mark Lambert. It is March 22nd, 2012, and I just want to post up a follow-up video to the one I posted on the 19th. One of the things, too, I want to stress is picking a top might seem like a good thing. I mean, there was a lot of indications for me to pick that top, which I found it to be very, very low risk. But picking tops and picking bottoms is not where the money is made. It's basically trading a trend. And one of the rules that I use all the time when it comes to trading is that after 3 waves, that you can perceive in the market, it's always a safer thing at that point in time to either close out a trade, knowing that it's a possibility that it's only a correction, or at the very least to increment your stop to protect the profits that you made. Because picking a top is nothing. It'll inflate the ego, that's about it. But if you want your account to grow, one of the things you want to do is basically protect what you've made. So here we are, 3 days later. We've formed 3 very distinct waves coming down on the S&P cash index, as you can see, which with 3 waves, I would say this is where you should invoke the 3-wave rule. One of the reasons I use that rule all the time is that even using Elliott wave patterns, you're always looking for a 5-wave move prior to closing out a trade. Just as you can see from this bottom, moved up 1, 2, 3, 4, 5. The 5th wave, we're up against resistance. 14 being the square root of 2, but plus a host of other reasons why I was looking for a top either that Friday or this Monday. Anyways, just to get into this a little bit more, we have 3 waves down. And when you can take a look also at the ESs, the futures, it's kind of hard. Last night when I was looking at this, I wasn't too sure exactly what type of pattern we were developing. But when you do shut off the Globex session and use just the primary session, as you can see, it formed 3 distinct waves, which we're looking for. Now, if you did not see this right here, which as of the close yesterday, all you saw was a strong thrust down, which broke structure at this point, and then a sideways moving action. At that point in time, you should be pretty much aware that you are going to get another leg down. So that's just the way I use the 3-wave rule. This is a point where now you have to increment your stop to protect your profits from the short. And then also, I mean, closing it out at this point in time wouldn't be a bad idea either. But I do have a feeling that in the Globex session we may come back down and retouch just 161.8. But either way, I mean, I'm not awake 24 hours a day, so I'm not going to trade 24 hours a day. But one of the things, too, I want to touch on, which I was part of a webinar yesterday, and when I showed this, I was kind of had like a couple aha moments with some people. And I just thought I'd share it with everybody because it's something that I utilize all the time. I do not use any tools to utilize this, but I'm just using this little retracement grid right here. I shut off the extension and everything so that way it doesn't clutter up the screen. But one of the things, I can see this when I just look at the chart, but one of the things that if you're not trained to see it at this point, you could use a tool. But after a while, you will train your eye to actually see this as it happens. Now, this is a retracement of this first leg down, and you want to know, is the market going to continue going down? And one sure way to pick it out is that what I do is I take this leg, I'll superimpose it onto this leg. As you can see, this little poke right here under, which is telling me the market is still growing to the downside or decaying to the downside, for better use of terminology. Okay, so now we take a measurement of that leg, we move it down to the next one. What do we have? We still have the market moving to the downside. It's still growing. Now what we do is we measure that leg. And what we want to do now is superimpose it onto this next one. As you can see, the market failed to continue past. As a matter of fact, it's supported right on the 81%. What you want to do at this point to see if we are going to get some upside action is you want to measure this leg right here, this counter trend leg, and then superimpose it to the next leg that's unfolding in the same direction, which is right here off the bottom. And as you can see, let me shut these off right here. 1 second. Coefficient did not show. There we go. That cleans it up a little bit better. As you can see, that the market, that following leg actually poked up higher than this counter trend leg, which is telling us that now we're probably going to be going into a counter trend. The same thing. You can just keep measuring this along, and you just keep following it up, and you can see, you know, it's running out of steam at this point in time. You can see this leg, another one, 81%. But it did not grow any further, which is telling you that this is probably going to be a counter trend push. So at this point in time, what you want to be doing is you want to be looking for a spot to go short at. The first initial place I would look at to go short is this first leg down off of this larger correction right here. This right here should act as resistance for any upward move. And as you can see, it did. When you move across the screen, this was the top. Then you can just keep doing the same thing over and over and over again. You measure this first leg down. You move it. You superimpose it. You superimpose it onto the next leg down. As you can see, the market is still growing deeper. Superimpose that to the next leg down. As you can see, the market is still growing deeper. Superimpose that onto the next leg down. As you can see, the market is failing to go down any deeper at this point in time. So one of the things I want to do at this point is I want to measure, as I just did previously, the last counter trend move, which would be this leg right here. And you want to move it down to here. As you can see, the counter trend is starting to grow. So this does not necessarily mean we're going to get a strong bounce coming up, but it does tell me one thing, that this is probably the meat of the move at this point in time, once we've moved back to this. So if I was still short, I would wait for this to come down a little bit, maybe, you know, 50% retracement, and I would close out, because this could foretell us that we're probably going to have some sideways moving action before the market does start to lift again. But either or, when you take a look at it, we have three waves down, which is telling me it's time to go basically tighten up on stops or close out a short. And at the same time, you know, you got this growth and decay model that I just showed, which seems to work very well all the time. We're close to a 161.8 fib also, which, you know, this could get hit in the overnight. But either way, that's what I'm looking at. And at the same time, as I could see that we poked down below this channel right here that I initially set. So now what I'm going to do is I'm going to change the channel around. I'm going to go from that bottom to this bottom. And let's go with this one right here. And with this, I would look for probably some type of counter trend move that may come back up and touch this channel again, or move sideways, touch the channel, and start to move down further again. So, but it's just a way to look at it. Basically, this is how you should protect your profits. You have three waves. For any motion to occur, you have to have three waves. And we do have three waves now. And that's pretty much it. Hope you enjoyed this. I hope this helps. And we'll talk to you soon.